Hey folks, this is Rainer here from Trading with Rainer. So welcome to my weekly analysis, right, for the 20th of May 2013. I apologize for the late delivery of this video because I was actually out of the country for a short getaway with my family over the weekend, so couldn't make it in time to get my weekly updates up. So hope you guys enjoyed the weekend, and nonetheless, let's get down to business. Okay, for now, the first pair again I'll look at is the dollar yen, right? Now, this is actually the world's favorite currency pair, as we can see that price actually breached the 103 level. So, looking at the weekly chart, price is really bullish. Just look at how many times price closed down lower for the week. I mean, one time, two time, three time, four time, five time, six time out of since September till May this year. Six times. So the odds definitely favor to go long, based on just the weekly charts. So we wouldn't want to enter on the weekly chart. So let's look at the 4-hour chart. So again, looking at the 4-hour chart, we can see some significant support level. Areas where we want to go long would actually be here, which is the 102 level. Let me highlight this, the 102 level. However, if you were to expect price to come in and form a bullish price action trigger, it may not really form because actually price from now to the 102 level is about 55 pips. So to get an entry for long, I would actually suggest going down to the 1-hour chart, and look for a bullish price action trigger here, down here. Let me draw it out, okay? So here, this will be a level to anticipate for a bullish price action trigger. Reason being, on the 1-hour chart, your stops will be smaller, tighter, and yeah, it'll be nicer to look for price action trigger here. Because if I were to look at the 4-hour chart, you can see that there's not much space from there to the 102 level, it's like pretty cramped if you ask me. So usually when price is congested and very cramped, I like to go down to the lower time frame and look for entries. So this is actually the case for my dollar yen pair. Remember, going down to the 1-hour chart and look for price action trigger at the 102 level around here, alright? Okay, so the next pair I'll be looking at would be the euro dollar. So the euro dollar, we can see again, price is still in a range. In fact, it just broke off the significant level of the 129.50, alright? So, but nonetheless, on the big macro picture, is still, potentially forming this head and shoulder pattern which I was talking about, alright? And also, given the fact that I'm still anticipating a bullish impulse leg, right? Because we have the impulse corrective, and now, if price breaks the 127.50 level, alright, so we will expect price to go further down towards the 121.60 level. If not, if this level holds, we could potentially still get our impulse move upwards. Alright, so looking at the 4-hour charts, some level to take note of would actually be here, the 129.50. This level here, you can look for price to retrace here and possibly look for a short opportunity. Alright, perhaps a pin bar and engulfing pattern. And areas to look to take profit will actually be here, the 127.50, right? Because as you can see on the daily chart, this level is actually quite significant as price has tested its support a number of times, right? See here, 1, 2, 3, and now potentially it's coming back to this level. So if you do get short, this level is actually a level to pay attention to tighten up your stops or even to take profits at that level, alright? So that's my euro dollar analysis. And the next pair we look at is the Aussie dollar. Looking at the weekly chart, you can see, wow, huge bearish momentum. Just look at the strong close of each candle. This candle close so strongly, and most gurus out there are saying this is oversold. But is it oversold? Well, the charts tell me that the next level to look at is the 96. So till here, price would be a level that we should watch out for. Okay, we can anticipate a bounce at this level, but from now to that level, we still have a move of about, say, 97.74. We have moved about 170 pips down. So for those of you who are looking for a short again, you still have some room to run. So looking at the 4-hour chart, again, it's not so clear to look for price action trigger at this chart. Possibly the 98.55 level. You can look for shorts down here, or similarly to the dollar yen, if you want to go down to the 1-hour chart, you'll be clearer to look for price action trigger. So as you can see in this 1-hour chart, we can look at how price has reacted to the level a few times. Here, here, and here. So the 98.55 level is definitely a level to look out for. Alright, and that's for my Aussie dollar. And the next pair I'll look at is the dollar Canadian. So looking at dollar Canadian, Let's look at the weekly chart. We can see some resistance at the 0425 level. But looking at the daily, we can see resistance coming in around the 1020 level. I would say 1032 level. Yeah. So again, I'll look for some bearish. I won't say some. I'll look for a bearish price action signal before going short. Alright, at this level here. Could be a pin bar like this. Alright. Or a strong engulfing pattern like this. Right, which engulfs the previous candle. So it's either the pin bar or the engulfing pattern, and I'll go short at this level. Okay, and the last pair I'll be looking at today would be the Euro Aussie Dollar, which is here. So this is a chart which is interesting, which is you can look back since October 2010. You can see how this level, the 130 level or 131 level, has held up since, if I plot a line here. So see, I'll give it the 131. See, watch how price actually respected it since. You can see price testing over and over again. 1 time, 2 time, 3 time, 4 time, 5 time, and now we're at the critical level of 131 again. So am I just going outright short at the market? Not really, not for me. I would rather prefer price to form some kind of, sorry, I used that word again. Prefer for price to wait for a bearish reversal pattern before going short. Or like some kind of confirmation that, the bulls are tired and the bears are slowly coming and take control at this price level. So I've actually boxed out the level, this 131 level, and I'm waiting for some sort of the trigger, the price action trigger before I go short. So definitely a key level I'll be paying attention to. And the risk reward wise is actually very, very delicious. Looking at it, the weekly chart, you can see a move down to potentially the 122 level, which is about 900 pip move. How sick is that, right? So, but we do know now that the Aussie dollar, the Aussie is not performing too well. People are speculating that for the rate cuts. So this pair is actually right at the cross junction right now. So if price were to break out further, alright, I'll go from bearish to bullish. But right now, if price is still stalling at this level, I'm still looking for a short opportunity at this price level. So till then, I'll let the market dictate what I will do, right? If price breaks up further, I'm going long. If price holds and form a bearish reversal pattern, I'll go short. Okay, I hope you guys found this week analysis useful. And with that, good luck and good trading. Remember, you never trade alone when you're trading with Rainer.